A manufacturing client called me last fall to ask why her cash balance seemed lower than it should be. Her business was doing well, strong orders, good margins, revenue up, but the checking account just felt thin. She couldn't point to a specific problem, just a feeling. When I started pulling her vendor payment history, I found it in about an hour. 7 months of duplicate payments to four different vendors. Not fraud, not theft, pure bookkeeping error. Invoices paid twice, sometimes three times, with the duplicates hiding across different payment methods and QuickBooks entries. The total, $14,200 paid out that should have stayed in her account. Hi, I'm Bev from bookkeepingcoach.net and Can-Am Bookkeeping. In 30 years of bookkeeping, duplicate vendor payments are one of the most common and the most avoidable cash leaks I find. And they almost always come down to the same set of process breakdowns. With Memorial Day approaching and many businesses reviewing their vendor relationships right now, now is the perfect time to find out whether this is happening to you. She ran a small manufacturing company, custom metal fabrication, about 1.7 million in annual revenue, a dozen vendors she purchased from regularly. She had a part-time bookkeeper handling accounts payable and a separate accountant who reviewed the books quarterly. Sounds like enough oversight. It wasn't. Here's how the duplicates happened. Her primary supply vendor emails invoices. Her bookkeeper enters them into QuickBooks when they arrive, marks them for payment, and processes the check. Standard workflow. Except this vendor also sends a paper invoice in the mail 3 to 5 days after the email. The bookkeeper would receive the paper invoice, check QuickBooks for a matching invoice, but because her search was by vendor name and approximate date rather than invoice number, she'd sometimes miss the match and enter it as a new bill. Payment would be processed twice. A second vendor was using an online portal. When the vendor sent the invoice through the portal, QuickBooks automatically imported it. But the bookkeeper was also manually entering invoices from an emailed PDF. The portal import and the manual entry were both sitting in QuickBooks as separate bills. Both got paid. The third situation? Her accountant sent a list of accrued expenses at year-end for the bookkeeper to enter as adjusting entries. 2 of those accruals were for invoices the bookkeeper had already entered and paid. When the adjusting entries were posted, they created a second bill, and nobody caught the match before the next payment run. After 7 months, here's the breakdown. Duplicate check payments to the same vendor, $6,400. Duplicate payments from portal auto import plus manual entry, $4,100. Payments from accruals that had already been paid, $3,700, for a total of $14,200. She'd gotten a few credits from vendors. 2 of them caught it and let her know. The rest, she'll spend weeks chasing them down. And not all of it will come back easily. Some vendors apply credits to future invoices. Some require formal refund requests. One of her vendors had already been acquired by another company. That $3,200 credit may be unrecoverable. And here's the real issue. For 7 months, $14,200 left her account that shouldn't have. That wasn't cash available for inventory, payroll buffer, or the equipment upgrade she'd been planning. The thin feeling she called me about wasn't mysterious. It was $14,200 that had walked out the door. The root cause of almost every duplicate payment is the same. No one is matching invoices to purchase orders or to prior payments before processing. Here's how to build a simple system that catches duplicates before they become checks. First, every invoice needs to be entered by invoice number, not just the vendor name and amount. When you search for duplicates by vendor name and date, you can miss them. Invoice number is unique. If QuickBooks already has that vendor's invoice number on file, it will warn you before you enter it. This only works if you're entering the invoice number. Second, set up 3-way matching for your significant vendors. Purchase order, receiving document, invoice. All 3 should match before you pay. This catches both duplicates and payments for goods or services you never actually received. Third, if you use auto import integrations, bank feeds, vendor portals, accounts payable software, establish a clear rule. Invoices come from one source only. If they auto import, you don't manually enter them. If you manually enter, you turn off auto import. Mixing both without a conflict check process creates duplicates by design. Fourth, before every payment run a quick duplicate check in QuickBooks. You can filter your open bills by vendor and scan for matching amounts and similar dates. It takes 5 minutes. Catches the duplicates before the money leaves. Fifth, any adjusting journal entries that involve vendor bills need to be cross-referenced against what's already been paid. Your accountant entering year-end accruals and your bookkeeper processing daily payments are two separate workflows that need to talk to each other. Sixth, reconcile your accounts payable aging monthly, not just your bank. Your AP aging shows what you currently owe to vendors. If the same vendor appears twice in the same approximate amount, that's a flag before it becomes a payment. So if you pay vendors regularly and you don't have a formal duplicate prevention process, what are your options? Option 1, trust that your bookkeeper is catching everything. Maybe they are. But in 7 months of normal bookkeeping activity, with invoices coming in through the mail, email, and portals, most bookkeepers catch most duplicates and miss some. The ones they miss are the ones that cost you real money. Option 2, pull your vendor payment history right now and scan for duplicate amounts to the same vendor within 30 days of each other. If you find matches, compare the invoice numbers. This won't catch everything, but it will surface the obvious ones fast. Option 3, build proper AP controls into your process. Invoice numbering discipline, source rules for auto imports, duplicate checks before every payment run, and AP aging reviews. Fix the process so that duplicates are caught before they become checks. The money that left your account as a duplicate payment is technically still yours. It's a credit with the vendor, but getting it back takes time, documentation, and in some cases, it doesn't come back at all. Prevention is vastly cheaper than recovery. If what you just heard sounds familiar, you're in the right place. At bookkeepingcoach.net and Can-Am Bookkeeping, we have courses designed specifically for small business owners who want to understand their numbers, protect their business, and stop finding out about expensive problems too late. Step-by-step training from 30 years of real-world experience. No judgment, no jargon, just practical knowledge that saves you real money. Head on over to bookkeepingcoach.net or canambookkeeping.com and find the course that fits you where you are now. The link is in the description below. Subscribe for more QuickBooks and financial management tips, and I'll see you in the next video.